Good afternoon, folks. We're good SFXA Academy, and we are on the start of the week session of the Forex trading room for June 2nd of 2019, new month. So we'll be going over the monthly results at some point as we check the ledgers and, well, of course, our regular agenda. We'll be going through the prior week, and as I said, we'll be going through the prior month as well in that section, our currency strength meter, our fundamental announcements for this week that's beginning, our major pair analysis on the daily charts, any setups we see in progress, and a few words in conclusion as usual. So that being said, let's take a stab at looking at our ledgers on the three different accounts. Just as a reminder to folks, we separate our trading into three different accounts: short-term trading, intermediate-term trading, and longer-term trading. They have different parameters, different rules, different goals. These are spelled out in our emails for those of you who are subscribers, and we're looking at the long-term account at this time. We only have one open trade. There's only been one open trade since our fiscal year started in April, and that trade has yet to close. So we have no metrics on the long-term account. It is too early for that. We're just 2 months in. Moving on to the intermediate term account, we've opened up 34 trades in the 2 months that this account has been active, 8 of them winners, 16 of them losers, for a win ratio of 52.94%. The account is currently up 10.16% overall on closed trades. We also have open trades on this account, which are carrying significant levels of profit. So if we were to close them out right now, we'd probably be closer to 20% growth on this account in 2 months. Well, it is what you can see there on the screen, so I'm not going to read everything out to you. It just shows you the latest trades. In the red box at the bottom are the trades that were opened the last week. We did close a lot of trades in the last couple of weeks at significant levels of profit, and we ended up opening a lot of new trades this week that just ended. And as I said, almost all of them are carrying significant levels of profit as we speak. So May was definitely a good month for our intermediate trading, and it looks like June is starting off with a bang. And as promised, some monthly results. This is, again, the intermediate term account. We had a slow start to the year, so April was just slightly negative. We were down 1/3%, so nothing really to worry about there. And then, as I said, May did kick in, and we had quite a nice chunk of profit taken in May. All these are closed trades. As I said, we do have open trades that are at profit right now, but those do not count. Until we close out a trade, that profit or loss does not exist. Metrics for the month, we opened 26 trades, 13 winners, 13 losers, and this highlights a very key point. You do not need to be right all the time, and that's going to be a theme towards the end of this session. We had a 50% win ratio. That means that we were right as often as we were wrong. Notwithstanding that, the account grew 10.49% in that month, and we took in excess of 450 pips in 1 month. That is pretty good. Not to toot our own horns too much, but that's quite impressive for a single month on intermediate term trading. And that's where we are right now with this account. Good luck to everyone in June, and happy and safe trading. We continue with our short-term ledger, and this is a weekly account that trades only short-term. On Fridays, we close out every single trade, so you will never see trades open over the weekend on this account. For the week that just ended, we were positive. We grew by 3.03%, capturing 115.7 pips with a win ratio of 75%. 8 trades open, 6 of them winners, 2 of them losers. You can see the 8 trades there on the screen. You can see that there's no huge winners, no huge losers. It is meant to be a short-term account. Every now and then we'll get a fantastic week simply because the volatility is going to be there for the week. This week was pretty normal, 3.03%. And let's take a look at our longer-term stats. So here you see on the left side of the screen, you will see every week since the beginning of our fiscal year. starting April 1st through the week that just ended. So we can see that we've had a couple of bad weeks. Our deepest loser was that first week. That first week was horrible, and the second wasn't much better. We had negative 6.87% right out of the gate, followed by negative 3.72%. So at one point, we were down almost 10% overall. We did start recovering soon after. And while we did end April negative, it was negative. And looking at the right-hand side of the screen, you can see that April carried a negative 9.04%. Then May, we started quickly recovering from that, and then we went into positive territory. So we ended up May with 18.68%. Our biggest growth in a single week was 14.07% with 574.4 pips. That was the week that started the 12th of May. So again, we're going to have very decent weeks along the way, but you can't plan for these. You have to plan for those small winners, small losers, and just make sure you have enough trades that when there is a significant move in the market, you're in it in the right direction, and you can harvest as many pips as you can. It's those big weeks, like the week of the 12th of May, that are going to give you the big profit and make sure your account is growing steadily. So as it stands, the 2 months combined, we're up 8.25% on the short-term account. So we started with $2,000, and these are all real money accounts. We don't trade demo accounts. We started with $2,000. The account now sits at $2,164.98 for an 8.25% gain in the 2 months. Those are the incomplete results for the quarter as well. We've 1 month yet to go to finalize our first quarter at the end of June. But right now, the quarter stands at 8.25% positive with 275.8 pips captured in total. And that is the end of our ledger review. We're looking now at our notes and opportunities for improvement. So a little bit of a recap. May was a fantastic month on the short-term and the intermediate-term accounts, as we just saw. And the long-term account has yet to close any trade, so it's flat for the year. We had some nice volatility in the market in the past month, and especially in the past week. And this was very clearly seen on the pound pairs as Brexit finally starts getting close to the end game. So all the dominoes are starting to topple. The pound significantly weakened this past month and also this past week. And well, we've been taking advantage of that as much as we can. Oil has crashed to prices not seen since January. So this was a very bad week for oil, coming off a bad week the week before. So oil is in a complete retrace. Not sure if it's going to go back all the way to the bottom, but it is in a shambles. The trade wars continue with Trump having just visited Japan. He made a few threats over there, a few agreements. I've not kept up with the news, so I have to read up and see exactly what everybody agreed to. But it looks like the meetings were positive for the U.S. in general. And the Japanese have been told that they're not going to be protected as much as the U.S. has been protecting them in the past when it comes to trade relations. At the same time, late last week, Trump threatens Mexico with new tariffs if they don't do more to control illegal immigration. This is a little bit of a confusing situation for everybody because we just finished signing a trade agreement with Mexico and Canada that has yet to be ratified. It needs to be ratified by the Mexican Congress and the Canadian Parliament. But everything seemed to be on track with Trump adding this threat to Mexico. Well, the obvious question is, why in hell would we sign a trade agreement if you haven't even let it be signed and you're already changing the conditions? So that hasn't actually been said. That's me speculating, but that would be the obvious reply from Mexico after Trump's words towards the end of last week. So we'll see how that plays out, but it is sure to provide the market with a little bit more shock. It's going to be felt more so by the stock market than the Forex, but we'll see what comes with that. And wrapping up, we do plan our trades and we trade our plan. That is the secret for long-term success in the Forex market or any other market for that matter. We're not trying to do discretionary trading. We don't wake up every day with a new idea and try it out. We have a plan. It might be a little bit boring compared to other pursuits in life, but it is safe. It is steady. and it is profitable. You do not want to be trying to do things differently every day when you're trading the market. Slow and steady is going to win the race over here. Moving on with our agenda, we're looking at the relative strength meter for the past 30 days and the past week. So we can see that volatility increased significantly on the monthly. It went from 4 something to 6.5. We can also clearly see that the Swiss was a nice mover. The Swiss did appreciate against every other currency except the Japanese yen. We see that the pound was the total loser of the pack. I mean, there's no other pair that lost against as many others, including the metals. So the pound was heavily hit during the past 30 days. The yen, the clear winner. The yen did appreciate against everybody else. And all the other currencies are here and there. They won some, they lost some, so not really relevant. Obviously, trading the Swiss, the pound, and the yen would have given us the most bang for our buck in the past month. And indeed, we did. A lot of our trades were based around these 3 currencies, so no complaints there. For the week that just ended, volatility came in at 1.17%, so not the biggest mover, but not the smallest either. We again see that the Swiss was a clear winner, gaining ground against everybody except gold. The pound, a clear loser, losing against everybody else. Japanese yen, very good performance for the week, only outshined by the Swiss franc. And the dollar was pretty much bottom of the pack this week. And again, we've had all these trade concerns and this, that, and the other. So the dollar did give up some gains, and it only outperformed the British pound, which again was the obvious loser for the month as well as for the week. In the metals, the last week gave us a silver making gains against everybody else, no exceptions there. And gold losing some, winning some, so gold pretty much stayed steady. So silver did have a nice bit of a rise. And we're now going to take a look at the announcement calendar for this week that's beginning. We have 3 different fundamental announcements that we will be trading live, the ones I consider most important here. And it's going to be the Reserve Bank of Australia's interest rate decision. So that's the Aussie Fundy. That is going to happen Monday night, but it will already be Tuesday. It will be Tuesday in the early hours at 12:30 a.m. We'll be opening up the trading room at midnight exactly on Tuesday morning. So Monday night into Tuesday morning at midnight, we will be opening up the trading room to trade this one live. Moving on to Thursday, we have the European Central Bank interest rate decision. We will also be trading that one live. Unfortunately, I'm usually asleep at 7:45 a.m. because I stay up trading the up through the London Open. So I usually go to bed around 4 a.m. my time. So I'm not sure what I'm going to do that night, but I will be up at 7:30 a.m. opening up the trading room so we can trade that one live. And last but not least, we have our Jobs Friday. So Friday is the first Friday of the month. So we have the non-farm payroll coming out of the U.S. That's always a high impact fundamental. And at the same time, we do have the Canadian employment numbers coming out. I do not trade both of them. I just cannot keep track of both currencies at the same time. That which means the USD CAD is banned from any trading. I'll be focusing on the dollar pairs, excluding the USD CAD for the obvious reason there. So we'll be opening up the trading room at 8 a.m. on Friday, June 7th, to trade the USD non-farm payroll. And much as I would like to trade the Canadian employment numbers, they come out at the same time, is just too much. And with that, we will move into our charts for the week, looking at the daily charts. This one is oil. As you can see, oil had the worst 2 days it has had in, well, forever. I don't see any 2 consecutive days on this chart that were as bad as Thursday and Friday of last week. It's gone all the way down several levels of support. And as I said before, it's at price levels not seen since January of this year. It is still a good $11 above the bottom of the chart, but it's definitely in a bearish pattern and headed in that direction. I'm not trading oil directly, but I do use it as a signal for Canadian prices. But that being said, the Canadian dollar has not really been linked to oil for most of this year. It's been moving contrarian. So when we see the Canadian charts, we can see that even though oil had the worst 2 weeks it's had since back in, I'm going to say October through November of last year, had the worst 2 weeks since then. Canadian dollar really hasn't moved a whole lot. So again, it's being contrarian. Let's move on to our currency chart. So the euro dollar on the daily is still following that downward channel. It has been very flat for the last month or two, but still in general trending down. We have been on both sides of this trade. We've traded it up, we've traded it down, we've lost some, we've won some. It hasn't been a big profit provider for us, but you got to be in the trades in order to be in them when they do a big move. So that's what we've been trying to do. And the euro dollar has not provided recently, but we keep trying. Pound dollar, I cannot say the same thing about the pound dollar. This one has been providing quite nicely since it crested back in February, March of this year. It has been going steadily down with a few retraces here and there, but always making those lower lows. We've caught a lot of those movements. We've caught a lot of profit along the way, and we're in it again on the intermediate term account. We re-entered the pound dollar. We're currently down a little bit because it did retrace on Friday, but again, the general trend is in our direction as well as the fundamentals. So no change there. We'll continue to carry that trade open. USD/JPY, it made a huge movement on Friday, which we didn't catch. I don't tend to enter trades on Friday. Friday usually has retraces and other nonsense, which are then undone when the market opens again Sunday night. The market is open right now. I really haven't checked it. But the important thing here is that the USD/JPY did cross that line of support at the 108.50. So we're now technically looking at a bearish breakout, and we'll have to see what the USD/JPY does in the next 24 hours or so. I may be entering short, or if I see a good retrace opportunity, I may enter long. Too soon to tell, but this has now become a chart of interest. USD Canadian, as I was saying, the Canadian has been weakening regardless of what oil is doing for quite a while now. So the higher this goes on the USD CAD chart, the weaker the CAD, or the stronger the dollar, or a combination of both. So on Friday, as oil had its worst day ever, well, the USD CAD went in the opposite direction and actually went slightly into CAD strength. Not a big move, but still, it's very indicative of the disconnect that as oil crashed, the Canadian dollar somehow got slightly stronger against the dollar on Friday. So this is not going to be my favorite chart to trade. I am looking for a bearish breakout on this chart to start trading it down, but that has not happened for quite a while. So I'll keep looking at it, but I'm in no rush to enter this trade until I see a much better opportunity. USD Swiss has also had that same bearish movement on Friday, which I don't wholly trust. In fact, I would not go short on the USD Swiss unless it breaks that line of support right underneath Friday's price. And it does seem to be heading in that direction. So we'll see what it provides. Right now, it's just too near that trend line that it just broke out. And I do want to trade it down. Let me make that clear. I'm a long-term bear on the USD Swiss, but I want to wait for the right opportunity so we're not caught in retraces and bounces and other stuff like that. But if you force me to right now, if somebody put a gun to my head and said, you got to enter the USD Swiss, I would go short. Aussie dollar has, well, it's a bearish chart. There's no denying that, but it has gone into a sideways pattern for the last 3 or so weeks. I'm still waiting for an opportunity to go short. It's very interesting that we see all those other dollar pairs that went bearish on Friday. You have that long black candle on Friday, not so on the Aussie dollar. On the Aussie dollar, we saw this one stay steady. Well, it should have been a long white candle since this is trading in the opposite direction. It's not a USD XXX pair, it's XXX USD. So the weaker the dollar gets, the higher this one should go. It did go bullish on Friday, but not the same way that we saw the USD Swiss and the USD JPY go bearish. So this one is still in a bit of a limbo. It's tracking sideways, and while it's tracking sideways, we'll keep an eye on it, but it's not going to be on the top of our radar. Kiwi dollar also showing a little bit of sideways action in the last 3 weeks, but with a little bit more of a bearish intent. It's looking for the trend line again. Friday had that dollar weakness come into the market and it went in the opposite direction, but not by much. It hit resistance, it bounced off, and is still tracking downward. This is one to be paying close attention to as the week opens to see if it gives any opportunities to continue trading it down. I think we have an open trade on the Kiwi dollar on the intermediate term account anyway, so we're already trading it down. So we'll see if we need to be a little bit more cautious with that trade, or maybe even reverse it and go in the opposite direction. So time will tell. These first 24 hours of the market are going to be key. Aussie Canadian, and this is our one open long-term trade, and we're trading it down. You can obviously see that it's going in the opposite direction. So we are carrying a 70 or 80 pip loss on that long-term trade, but it is long-term. It does have a wide stop far above that Ichimoku cloud, and I think even above that level of resistance at the 95.65. So we have quite a ways to go before that trade is at risk. And of course, the trend is bearish. It is still bearish, and we're looking for it to do a turnaround and start heading towards the bottom. I don't monitor that trade all that often. It's meant to be long term, which means that if I look at it once a month, that's more than enough. It'll either turn around and take us into profit, or at some point we will get out of it. Euro Swiss, we're already short in the Euro Swiss on the intermediate term account and carrying a nice chunk of profit. And I think this was our second time around. We had already taken profit out of the initial bearish movement. We got out on the retrace that you see happened in the last week or two. And then we got back in, and it is significantly on a strong line of support. And it looks like it's trying to break it. So again, this is another one where these first 24 hours of the week are going to be key. We're going to see if it's going to have the strength to keep going, or if it will start bouncing. That red line where price is sitting right now was my original initial target. When I shorted the Euro Swiss, I was looking for it to go down there, but preferably my second target would be the blue line, the bottom of the channel that you see dropping towards the right-hand side of the screen. That would be where I would be trying to really get out of that trade with my profit, or at least tighten the stop to take advantage of it if it keeps going, but be ready to get out if it reverses. The bottom of that channel is going to be a very strong psychological level of support for the Euro Swiss. Euro pound, another open trade. We're trading this one up. We have a little bit of profit, not a whole lot, but a bit. We can see that on Friday it spiked and then went back down towards that line of support resistance. We're still waiting for it to cross it. We did take a good chunk of that prior movement up, the bullish movement. We took 140 pips or so, I forget the exact number, but we caught a good chunk of that move. We got out at profit, and then when it seemed to bottom out in the last 4 or 5, in the last week, we went back in, and we went back in the same direction. And of course, with the pound doing what it is doing, that's a pretty safe bet. And we're trying to trade it all the way up to the top of the chart in the 91 area, that top red line. So that is our immediate profit target, and no change there. Euro JPY, another trade that we opened rather late into the week. That blue line at the bottom was my trigger to enter that trade short after it broke that level of support. It did, and I did. I entered short as I said I would on the blue line, and we're carrying that profit as we speak. My initial target is the bottom of the chart, that prior low made by that huge candle back in the end of the year or the beginning of this year. So that's my initial profit target. We'll see how deep it ends up going, or indeed if it does even start going backwards. So no telling at this point what it's going to do, but it is starting to look like a nice bearish breakout. Euro Canadian, this one we can safely ignore. It's been sideways for quite a while, just bouncing between the two red lines. It's nestled inside right now, not giving us a whole lot of opportunity to trade in either direction, but eventually it will have a breakout and we will trade it. For now, it's not doing much. Pound JPY, what can I say? This is one of our big winners. I haven't run the numbers to see how much of our profit in the two profitable accounts is due to the pound JPY. Two profitable accounts because the third has not closed any trade, so it's not losing, it's not winning. But on the two profitable accounts, I'm sure that a nice chunk of that profit is thanks to the pound JPY, among other pound pairs. So this one's definitely bearish. We're in this trade already. It's done yet another bearish breakout, crossing the next to last level of support on the chart. And our next target is about 500 pips below when it hits the 132, very near the bottom of the chart. So that's going to be my my target. I think it already is. We have that set as the limit to take us out if it gets that far. We'll see what it does. It is looking good. And I'd be hard-pressed to show you a more bearish chart than this one right now, unless it's the pound Swiss, which we'll be getting to a little bit later. Aussie JPY also crossed a level of support, and that was, again, my trigger to get into the trade. So we are in the Aussie JPY short, and we are carrying a very small profit. That's one of the more recent trades that we have on the books. Euro New Zealand was going nicely up. We had a nice bullish movement, which has taken a breather. It's been going sideways for the last 3 or 4 weeks, and we've been waiting for it to either break out towards the bottom or break above that level of resistance at the 172. I'm willing to trade this one in either direction. I just wanted to get it out of that wedge that it's been inside for quite a while. And here's the pound Canadian. This was moving nicely bearish, and I think we took some profit. I think we took some loss as well. We ended up flat on the pound CAD, since it has been retracing quite strongly when it does, only to go back in the opposite direction quite quickly. But it has been sideways for the past 2 or 3 weeks as well, so not giving us much of a chance, and we're not trading it right now. If it does break out of the, if it does break support right underneath it, I would definitely go in short, but I'm in no rush. This is one of those rather the more dangerous pound pairs, since the CAD just seems to be doing its own crazy thing and being very, very unpredictable. So be careful with this one. It's definitely a bearish chart. I would definitely like to short it, but I want to see a little bit more, I guess, strength to that movement. I want it to break out of the sideways is basically it. Pound Swiss, as I mentioned, this is another nicely bearish chart. It's just been dropping very steeply towards the bottom. It tried to break out of the trend line. That failed. It went underneath the trend line yet again. We're already short on this one. We're carrying about 75 pips adjusted profit, and that was either our second or third ride on that train. So we've taken a very nice chunk of profit out of the pound Swiss in the last few trades, last month or two, really in the last month. So May was a really good month to trade the pound Swiss as far down as it would go. And it looks like June is starting off the same way. So we'll see how far it goes. It's getting closer and closer to that bottom, but it still has an intervening level of support it needs to cross. I'm going to keep that trade open so long as it remains at profit. Probably very soon I'm going to adjust the stop, so we're not risking much on this trade if it does reverse. But I do want to give it enough room to move. If it goes all the way to the bottom, it's going to make June for us. It might even make July, August, and September for us. So we'll see how this plays out. For now, it is a short. We've got it open and no change to that. And that was our last chart on our review for the dailies. I don't look at every single chart. There's a few charts I don't look at almost ever. Pound Australian comes to mind. There's one that I haven't had in the deck for quite a while. If any of you are interested in me looking at a specific currency pair out of the majors, I'm not going to look at, the yuan against the ruble or something like that. But if I'm missing one of the major currency crosses and any of you want me to focus on it for any reason, drop me a note. I'll be happy to add that currency to our deck going forward. And now the setups in process, or in progress rather, that we see, of course, the pound pairs, the pound is melting down. And we're going to write it down as far as it wants to go until it U-turns. The Swiss pairs are finally starting to move against the other currencies, starting to move into Swiss strength. It's being very sluggish against the dollar, however, except for Friday when it did try to catch up. But it's too soon to tell. It looks like a Swiss strength move is beginning. But again, we have to be very cautious. It just could be the part of a wider sideways movement. And we want to make sure we don't give up any profit, or we want to be sure as much as possible that we don't give up profit. But at the same time, we also don't want to tie up equity in sideways movements, because even though we're not losing money when it goes sideways, we are tying up equity that could be better used to make profit on other pairs. So that's also part of what we try to do, is not tie up money in stuff that isn't moving. So with the Swiss pairs, I'm going to wait throughout this week. I want to see where it goes, and then we'll start cautiously jumping in. Canadian pairs, we've already covered that. Oil is crashing. The Canadian doesn't care. Oil is going up. The Canadian doesn't care. Usually the Canadian dollar is tight at the hip to oil. Oil does well, the Canadian does well, and vice versa. We haven't seen that happening this year for whatever reason. And what I've been reading in the journals is that the investment in oil infrastructure in Canada has dropped to historic lows. So even if there is a boom in oil, Canada is not currently positioned to take advantage of it, because their production cannot ramp up. And conversely, if oil goes down, it really doesn't matter, because Canada is already at a low when it comes to producing oil for the time being, simply for lack of investment in new oil drilling facilities. So that might be an explanation, might be a partial explanation, whatever it is, what I've managed to glean from the news. And for the time being, all we need to know is that oil price does not seem to be affecting the Canadian dollar as much as it once used to. So we'll keep that in mind. At some point, I do expect the Canadian dollar to recover and do a little bit of a strength play, and we'll be ready for it. But until it happens, we'll stay out and look at it from the sidelines. U.S. dollar pairs, the U.S. dollar is starting to show some weakness. As I mentioned, it's mostly on the back of the uncertainty of all these trade fights that the U.S. has been picking with China, Mexico, Canada, the Europeans, everybody. So at some point, there's the concern that that is going to affect the market. When you place a tariff on a product, it really doesn't hurt the country you're placing the tariff on. They could really care less. It affects the consumers. So if the U.S. places high tariffs on Chinese goods, what's going to happen is that when you go to Walmart, where 80% of the stuff is Chinese, you're going to see prices going up. Neither the Chinese government nor the U.S. government are much affected. It's the person that's buying the Chinese crap, I'm sorry, I have to say it, Chinese crap in Walmart. They're the ones going to be affected when they can no longer buy as much as they once could. And that in turn will start hurting the economy in many different ways. So that's the concern. It will also hurt importers and exporters who can no longer do as much business as they once could, which is why it will affect the stock market. Shares in those companies will be affected one way or another. But the U.S. dollar had not shown any much weakness, even with all that, but now it's starting to show a little bit of it. So we're going to be cautious. We're going to be trading it in whatever direction it's going. I don't care if it's into dollar strength or dollar weakness. We'll still be trading it, but we want to be very cautious because it could turn on the drop of a dime. And last but not least, the Australian pairs. The Australian dollar is still weak, but I don't know if it can weaken much further. But I've said this before. I said this when it was much stronger than it is today, that I didn't think it could weaken much further, yet it has. But it doesn't matter, because I do not trade my opinions. I trade whatever the market is doing. So we'll continue trading the trend until it bends. But probably for the Australian dollar, I'm going to revise my prior statement. I'm probably going to focus on the Australian dollar more short-term than longer-term, until and unless we see it break support and start free falling towards the bottom. That would be the one thing that might make me go longer term on the Australian dollar. That's it. So a few parting words from me. And as I said, this week I'm focusing on the people looking for huge wins out of the market. And my advice is, stop looking for jackpots. I had somebody email me asking questions earlier last week, and I'm happy to reply to questions. I try to make myself available. I certainly don't. I guess don't deny people the ability to send me questions. I try to answer them as quick as I can. But in particular, this person was telling me that they read my book, that they really liked it, and thank you, blah, 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 and that they started demo trading. First mistake, I don't believe in demo trading, and I've been quite vocal about that. The market conditions are completely different. Your broker is not going to give you market conditions when you're demo trading. They're trying to make it look easier than it is, so you put money in and start trading. So you're not going to get a really good simulation of the market if you're demo trading. I'm sorry, that's just the way it is. So that to me was my first I wouldn't be doing that. And then they went on to say that in the last 2 weeks, they were very, very happy because they had managed to make a few $1,000s out of their demo trading account. And they were sure they had found a system that worked for them. And then suddenly, whatever happened, and they kept using the same system, and now they're down a couple of $100. So they gave back all their gains and then a couple of $100 more, and now they're not sure about the system. Second mistake. You cannot trade a system for 2 weeks and decide whether it's good or bad. That's just not long enough to do a proper test. There's some systems I really haven't approved 100% and started using them with confidence until I'm a year or more in. 2 weeks is nothing. 2 weeks could be just dumb luck that you traded and you were on fire that week, or the market was on fire and you just couldn't do wrong. There's many reasons why you can have a very good 2 week period. That doesn't matter. Show me your performance for at least a year, and I'll tell you whether you have a system that works or not. In fact, you don't need me to tell you. You'll know immediately whether your system is working or not. So back to the problems I see that many newbies make is, one, they want huge wins. They want those few $1,000s in 2 weeks. That's not the way the market works. You don't want to be chasing the huge wins because you're never going to have many huge wins. And two, they're afraid of being in losing trades. Well, let me tell you, you're going to be in losing trades. I made a point of showing you my metrics before, not to brag, not to show you how good I am at this. There's no hubris in what I'm doing, but rather to show you a few key things. You notice that on the really profitable account performance that I showed you, our win ratio was 50%. We opened 26 trades. We got 13 winners and 13 losers. Many people would say, well, that's horrible. Well, it can be all the horrible you want, but I still made 10% out of those trades. So it doesn't matter how many trades you get right or how many you make wrong. The important thing is that you're making money as you do it. I try to be in as many trades as I can that make sense. I'm not going to jump into a trade willy-nilly, but I know beforehand that most of them are just going to be small wins or losses. Out of 100 trades, I may have 90 that lose a little or win a little and essentially end up canceling out. But the other 10, that 10% of trades, are going to be those huge wins that we all want, but we can't be chasing because not every trade is going to be a huge win. But if you're in 100 trades and you've got any sort of system that allows you to cut your losses short and let your winners run, I can guarantee you're going to have a few huge wins along the way. And those huge wins are the ones that are going to give you the bulk of the profit in your trading. So don't be looking for them. They're going to be looking for you. All you need to do is be in enough trades that when there's a big movement, you're going to be in one or more of them. And then let time do the heavy lifting. Trading is not going to make you rich from 1 month to the next. That's not the way anything in life works. This is a process. If you don't have enough money for 500 pips to be a meaningful sum, well, that's your problem. You don't have enough money for that. But that's self-correcting. If you start with a small amount and you're steadily making 500 pips every month or however many pips you're making, that account is going to grow. And at some point, 500 pips is going to be $10,000 you're making every month. And then you're going to say, wow, I can live off of that. So that's what you're looking for, but that's not going to happen by July of this year. It took me 10 years to get to the point where I could say to my boss, hey, thank you so much for the six-figure salary, but find somebody else. I'm done working, and I'm going to go do my own thing. And that was 3 years ago, and I haven't looked back since. But could I have done that when I started trading 15 years ago or however long it was? No. I was, on a good month, I was making $100. But over time, that $100 turns into a crap load of money that you're making because your account is going to be growing all the time, slowly but surely. And at some point, you're going to get to that tipping point where it is a significant gain. And we hope to be here for you. As I mentioned in some of my emails this week, we are going to be doing a little bit of housekeeping. So folks that have their subscriptions expired, I'm sorry. I love you guys, but I am a business, so I have to do this and earn some money off of it. Otherwise, I needn't bother doing it, and I could just go back to trading by myself and making money and not doing much else. So this has to pay for itself. Otherwise, it's not fair to anyone. So I will be saying goodbye to a few of you. But again, I don't understand why I should be doing that. If I made all those pips that I showed you I made, unless you guys just don't have enough money to trade, or you're looking for those big wins, you're looking for me to give you 10,000 pips every month, which ain't gonna happen, then I don't understand why you would not subscribe for our yearly offer on all three of our products for one price: our trading room, our copy trader, and our signal service. So if you have any questions, reach out, let me know. Otherwise, hey, it's been fun. And for those of you who are here for the long haul, as always, we do appreciate you, and you're the reason why I'm doing this. So thank you very much. And that is going to be the end of it for today's start of the week. Any questions or comments from anyone?
Yes, I do, Andy. Hello.
Going once, going twice. Okay, in that case, thank you very much. Again, it's been huge fun, and I'll talk to you guys later.